Welcome back to Investing Talk Podcast.
Today we are looking at a company that sits, right at the intersection of the two most hype-driven industries on the planet right now.
Oh, yeah.
On one side, you have the just insatiable energy hunger of artificial intelligence. And on the other, you have this sudden, massive renaissance in advanced nuclear physics.
Okay, I'm intrigued.
We're talking about Oklo.
Oklo, ticker OKLO. And, usually when we talk about energy or utilities, we're talking about steady dividends, utility poles, that kind of predictable, almost boring stuff.
Right.
But looking at the data here, this doesn't feel like a utility company at all.
It is definitely not a utility company, no. This is where the world of AI hyperscalers, those massive data centers powering ChatGPT crashes headfirst into advanced nuclear fission.
Wow.
It's a huge bet on the future of energy, and it's backed by none other than Sam Altman. So what here is pretty massive. If this works, this is the battery that powers the entire AI revolution.
Okay, if this works, big if. And I have to jump in here with the cold water because, well, that's my job.
Go for it.
We're looking at a company that is entirely pre-revenue. They have zero sales, not low sales, zero. So in the traditional sense, this is the ultimate story stock. You're buying a narrative, a vision, but you are not buying a P&L statement.
That's fair. It is a pre-commercial company, but the story is backed by some really serious technology and some very deep pockets, which we will get into.
We will. But as usual, before we start, subscribe, like, and comment to this video to support the show. It really does help the algorithm know that you want more of this kind of analysis.
Okay, so let's get into the numbers and the story behind this thing.
So let's look at the balance sheet. Because if you have zero revenue, your cash pile is basically your oxygen. How long can they hold their breath?
They're actually in a pretty stable spot right now. They came public through a SPAC merger with Alt-C Acquisition Corp, and that deal got them about $306 million in gross proceeds.
Which is a decent war chest, but, in the world of nuclear energy, $300 million isn't exactly infinite money, is it?
It isn't, no, but importantly, they aren't saddled with a massive debt load yet. However, because there is no revenue coming in, that cash is, strictly fuel for the fire.
So they're just burning it.
They're burning on R&D and, maybe most importantly, on regulatory hurdles.
The regulatory burn is real. We'll get to the NRC, the Nuclear Regulatory Commission, later, but that is not a cheap process. You're just paying lawyers and engineers constantly.
Yep.
And obviously, with that kind of cash burn, investors should not be expecting any dividends or buybacks. Not anytime soon.
Absolutely not. Every single dollar is going toward getting this thing commercialized.
Yeah.
But you have to understand what they're actually building to see why people are willing to fund this.
Okay.
This is not your grandfather's nuclear power plant with the giant cooling towers. This is the Aurora reactor.
This is the moat you were excited about. So break down the tech for us. What makes an Aurora reactor different from, say, what we have running the grid today?
So almost all traditional nuclear plants are light water reactors. They use water to cool the core. Now just think about the physics. If you want water to stay liquid at several hundred degrees, what do you have to do?
You have to pressurize it a lot, like a pressure cooker.
Exactly. Massive pressure. And that high pressure is why nuclear plants are so incredibly expensive. You need these thick steel vessels, huge concrete containment domes, all these redundant safety systems. It's a plumbing nightmare.
Right. So the cost is mostly in the safety systems you need to manage all that pressure.
Correct. So Oklo is flipping the script. They're building a liquid metal-cooled fast fission reactor. It's a small modular reactor, SMR.
Liquid metal cooled. That just sounds more expensive, intuitively.
It sounds high-tech, but it actually simplifies things. See, liquid metal has a really high boiling point. It stays liquid at atmospheric pressure.
So no pressure needed.
Exactly. The reactor doesn't need to be pressurized. You just remove that huge layer of complexity and cost. You don't need the giant containment dome because there's no pressure to contain.
That makes a lot of sense. Simplification usually cuts costs. But I saw something in the notes about the fuel source that really, it stopped me in my tracks. They aren't just mining new uranium.
No, and this is the real kicker. It runs on nuclear waste.
Wait, hold on. Clarify that. It uses spent fuel from other reactors.
Exactly. It recycles fuel. You see, traditional reactors only use a tiny fraction of the energy in uranium before the fuel is considered spent. It's like taking one bite of an apple and throwing the rest away.
Okay.
Oklo's design can take that waste, which is actually still like 95% full of energy, and burn it.
So they're literally turning a liability radioactive waste we have no idea where to store into an asset.
Precisely. And because of the physics of it, these reactors can operate for 10 years without needing to be refueled. Compare that to a traditional plant that needs downtime every, 18 to 24 months?
A 10-year runtime.
Yeah.
It's incredible. It's basically a nuclear battery. You install it, and it just runs.
And it's safe. This is the part that really matters. It relies on something called negative reactivity feedback coefficients.
Okay, unpack that. That sounds like some heavy jargon.
It's just physics, not software. In a traditional reactor, you need active safety systems, pumps, valves, operators. If the power goes out, you have a big problem.
Right.
With Oklo, if the reactor gets too hot, the physical properties of the fuel and the coolant naturally cause the reaction to slow down. The atoms expand, the reaction gets less efficient, and it shuts itself off.
It shuts itself down automatically.
Yes. It doesn't need an operator to hit a button. It doesn't need pumps to flood the core. It just follows the laws of physics and cools itself down.
Which means you could put these things in places you can never put a traditional reactor. You don't need a huge workforce nearby.
Precisely. And that's their whole commercial strategy. They aren't trying to power the entire grid. They're targeting off-grid deployments. Think about a massive AI data center in the middle of nowhere. It needs huge amounts of 247 power. Oklo wants to park an Aurora reactor right next to it.
So they just bypass the grid congestion issues entirely? The grid is full, transmission lines take a decade to build, so they just go direct to consumer.
Yes, and they already have traction. They've signed 20-year letters of intent LOIs with companies like Diamondback Energy and Wyoming Hyperscale.
But LOIs aren't contracts, they're just intentions,
Yeah.
right? Non-binding maybes.
They are. But they signal that the demand is real. The big target is to get the first one deployed at the Idaho National Laboratory by 2027.
2027.
Yeah.
That is the magic year. That's what we're all waiting for. But let's pivot to the charts and see how the market is actually treating this, because the timeline and the stock price, well, they don't always agree.
It has been a wild ride, for sure.
Wild is an understatement. If you were looking at the chart for this stock, it is not for the faint of heart. The volatility is extreme. Just look at early February. On February 4th, you saw a massive plunge that was tied to a broad market sell-off. But then just 2 days earlier, on February 2nd, it dropped because of a pullback in uranium prices.
And that correlation is really interesting. You mentioned they use recycled fuel, so why is the stock so tied to the price of uranium?
That's the psychology of the market. Even though Oklo's model is about recycling waste, which you'd think insulates them from mining costs, the algos and traders just lump it into the nuclear basket.
Right.
So when uranium spot prices dip, or when there's news about US-Iran nuclear talks putting pressure on the commodity, Oklo gets dragged down with it. It trades in sympathy with the sector, regardless of its own news.
So it hasn't really decoupled yet. The market doesn't see it as a tech stock. It sees it as a commodity proxy.
Not at all. Technically, the stock is in a state of, let's call it psychological consolidation. It's just basing. It hasn't broken out to new highs, but it hasn't completely collapsed either. It's waiting for a catalyst.
We did see some interesting momentum recently, though, didn't we?
We did. On January 28th, there was some unusual activity. High options volume and a price jump. That usually signals traders are placing bets. But looking at the flow, it feels more speculative.
How so?
It looks like traders chasing volatility, not necessarily big institutions parking their money for 10 years.
And it seems like policy news is the main driver right now.
100%. On February 3rd, there was a pop in the price. Why? Because the Trump administration made an announcement about critical minerals. When the government speaks, this stock moves. It is very sensitive to that macro narrative.
Okay, so the charts are messy, but let's look at what the street is saying, because the sentiment here is just all over the place.
It really is. If you just look at the quantitative scores, it comes out mixed, maybe neutral, but that hides the real conflict underneath.
And the conflict is fascinating. On one hand, you've got these bearish headlines we talked about. Oklo stock is plunging, fears about geopolitics. But on the other hand, you have some incredibly bullish calls.
You're talking about Texas Capital Securities.
Yes. On January 28th, Texas Capital Securities initiated coverage on Oklo. They gave it a buy rating. But catch this price target, $138.
$138.
138.
That is aggressive. Especially for a stock trading where it is now. That implies they think the 2027 deployment is a done deal and that data center demand is going to be infinite.
Well, they are looking at who is backing this company. We have to talk about the Sam Altman premium.
Sam Altman, Peter Thiel, Dustin Moskovitz.
Oh.
It's a who's who of Silicon Valley.
Exactly. Sam Altman, through Hydrazine Capital, is heavily involved. He's the chairman. So when the guy who runs OpenAI says, hey, I need more power for my AI, and then he invests in a nuclear company, the market pays attention.
It suggests a pipeline.
It suggests OpenAI could be a future customer.
It does.
Yeah.
But I need to temper that a little bit. Having big names is great.
Right.
But we track insider buying Form 4s. We haven't seen recent cluster buying from these guys. They're holding their positions, which is good. They aren't dumping, but they aren't aggressively loading up on more shares at these levels either. They're waiting, just like the rest of us.
That's a fair point. But there is a floor for the sentiment, and that comes from the government. You mentioned the critical minerals announcement. There's a $12 billion stockpile plan for critical minerals, which includes uranium. The government wants this technology to work.
Which helps. But let's be real. I need to pour some cold water on this. Let's look at the risks. Because there is one hurdle that's bigger than technology and bigger than money.
The NRC.
The Nuclear Regulatory Commission. This is the bottleneck. They are historically incredibly tough. They are not known for speed. They are known for safety, and frankly, they were not built to regulate Silicon Valley-style move fast and break things companies.
And Oklo has some history here, right? It hasn't been smooth sailing.
It has not. In 2022, the NRC actually denied Oklo's initial application, the COLA. Now, to be clear, they didn't say your tech doesn't work. They said you haven't given us enough information.
So it was a documentation failure, not a physics failure.
Exactly. They basically told Oklo, you haven't done your homework to our satisfaction. They have since resubmitted, but you're right. Historically, getting a new reactor design approved can take 10 years or more. Oklo is betting they can do it much faster to hit that 2027 date.
And that's the real risk.
That is the binary risk. If 2027 slides to 2029 or 2030, the value of this stock changes dramatically. In a high interest rate environment and capital-intensive projects, high rates delay is death, or at least delay is dilution. They'll need to raise more cash to survive, and that means issuing more shares.
There are some rumors, though. Reports from May 2025 suggested the Department of Energy might fast-track deployment specifically for AI data centers because it's becoming a national security issue.
Speculation, unconfirmed. Until we see a stamped approval from the NRC, it's just a rumor. And we can't model a stock price based on a rumor.
And you brought up the commodity exposure earlier.
Yes. Even though they have a moat on fuel costs because they use waste, the stock price is just shackled to uranium spot prices. If uranium crashes, Oklo probably falls with it. You're taking on commodity risk for a tech company.
Okay, so the risks are clear. Regulatory delays, commodity volatility, and that pre-revenue cash burn. But we have to weigh that against the potential. So let's move to the verdict.
All right, give it to me. You've looked at the growth potential. What's your score?
I'm giving this an 8 out of 10.
8 out of 10. That is high for a company with $0 in sales.
It is high, I know, but the competitive moat is massive. If the Aurora reactor works, and the physics says it should, it solves the single biggest bottleneck for the next decade of tech: energy. I mean, we have AI models getting exponentially larger, and the grid just cannot handle them. Oklo offers a solution that is off-grid, it's clean, and it runs for a decade straight.
So the elevator pitch is basically it's a waste-fueled, inherently safe battery for the AI revolution.
That's it, exactly. And the policy tailwinds are finally blowing in the right direction. The government wants this. The tech industry needs this.
So what's the time frame for an investor here?
This is a multi-year hold. You are not buying this for next quarter's earnings. There are no earnings. You're buying this to wait for that 2027 inflection point.
The Idaho deployment.
That deployment at the Idaho National Laboratory is the moment this company goes from a science project to a real energy utility.
I agree on the potential. The asymmetry is absolutely there. If they pull it off, it's a multi-bagger, no question. But I have to reiterate the volatility warning.
For sure.
This is a high-risk, high-reward play. Do not put your rent money on this. Expect 20% swings in either direction based on news that has nothing to do with the company itself.
Agreed. It requires patience and a very strong stomach.
That's the deep dive on Oklo.
A fascinating mix of nuclear physics and market psychology.
Don't forget to subscribe, like, and comment to support the show. We'll see you in the next one.